Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Tuesday, March 11th, about 6 a.m. Central Time. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So let's get you ready for the trading day here as fear grips investors and panic in the stock market triggered some profit taking in the precious metals on Monday. Now, overnight, we're seeing a snapback in many of these different markets across the board. One thing that I do is I utilize the volatility index as kind of a gauge to see where we're at and how long will this panic take place. The way I do that is I look at the curve on the volatility index. So looking at the last on the March contract, which is the front month, trading about 24.46. We did see a pretty big spike up here yesterday overnight up to about 26.45 and at one point even 28 yesterday. So it has simmered down a bit. Now where I use the curve is I start to look at, okay, April contract, and then you go out to June, July, and August, all settling back down quite a bit here. So the curve just looks like this, meaning that a lot of this volatility index and volatility in the market is expected to come out of this market within the next couple weeks, within the next month, and things like that. So looking at the markets here overnight and looking at the precious metals, we are seeing gold futures rebound here back over $2,900 an ounce as that global sell-off really lost momentum overnight and hit a capitulation point. The critical level you want to look at of support on the S&P 500 is look at those lows, 55.58. You don't want to see the market break that as it opens up another wave of selling most likely in the markets here as you get that second wave of panic. Now, gold is up about 11% this year, and it's been driven by the central bank buying, the speculation about the Fed cutting interest rates. You get that kind of panic sell-off, it brings forward that curve as far as when the Fed is going to cut rates, and it's kind of a juggling act between May and July. Now, the Fed is in a blackout period, so we'll want to start to watch that FOMC tool starting more like later in the week, towards into next week here, where we get all the inflation data coming out and a lot more jobs data coming out as well. So I really believe that gold futures are setting themselves up. If we do get a technical breakout over some of these key levels here, prices could hit that $3,000. And you see many of the commodities markets rallying overnight, especially with the dollar index breaking down. So do yourself a favor, look at the dollar index chart, look at seeing how it broke its low, look at the capitulation that we're seeing in the S&P 500 and that kind of snapback here in a lot of different commodities. Look at your copper, your platinum, your silver markets, with silver futures advancing about 1.5% right now. So looking at the overnight price action in the precious metals, and this says above about 6 a.m. here, we got April gold futures 29.17, up $17.90. So tells you it settled right at about 2,900, and consider that your pivot point on the day, about 29.03. The overnight high is going to be 29.20. The overnight low is going to be 28.82 and a half. So we're up about 0.5% right now. The average true range, and this is important when you gauge volatility in a market. So when you look at the S&P 500 and you go back 10 years, 15 years back, the average true range on the S&P was like 6 to 8 points. I used to pray with my coworkers that we'd get a 10, 12 point rally, and especially in one direction here for day trading purposes. Now you look at the gold market for a long period of time, $20 was a big move. $43 has been the average and been the average for quite a while here. So no real significant degree of volatility there. If you look at the silver market, the pivot point on the day and one of the levels that I'll be watching here is 32.65. If we go below that on any kind of meaningful volume, and we could stay below that before, a 10-15 minute period, then chances are we're going to run back down to those lows. So the average true range on the silver market, 82 cents here. So given where we're at, 32.99, we could end up back down near those lows. I'm not saying that I'm bearish on the market by any means. I'm just identifying different things here, different things that I'll watch in a roadmap here. Where's a gas station at? Where's a restaurant at? Where's this? That's what I look at, where the lows, the highs, the pivot points are, and then what's the speed limit? What's the average true range and things like that? And what are some key levels? What are some destinations I like to get to on this road trip here? So I'd like to see the market close on the gold market above 29.31.40. That's my critical level there. We close above there. I think we got a good shot at challenging those all-time highs. We challenge the all-time highs. I think we make that run to 3,000. Now, once we get above there, could get a little bit dicey because you could have people that are going to rotate into U.S. equity markets with a lot of the valuations, a lot of the stock market getting beaten down quite a bit. You hear about names like Tesla down significantly, massively oversold. You could legitimately see people rotate, take profits out of one thing and buy other things, and it's not uncommon whatsoever. We see it all the time, and I can tell you that we saw it here yesterday in the precious metals markets. We saw exchange traded funds. They cut about 21,000 ounces of gold here from their holdings in the last trading session. They bring that net year's purchase up to 3.21 million, or I'm sorry, down to 3.21 million. Where did they go? Well, the ETFs, they added 2 million troy ounces of silver in their holdings in the last trading session, bringing this year's net sales to 9.26 million ounces. So rotations do happen, and they happen all the time. The critical level I want to see breached on the silver market to the upside is going to be 33.40. So we start to take out some of these levels, then things change. Then the mentality of the investor starts to change. Just like on Bitcoin, really that critical level is 92 to 94,000. We get back above 94,000, chances are we'll run to 100,000. Oh, it's back on. Oh, the bottom is in. Oh, we should go up to these well-rounded numbers here. That's why those well-rounded numbers act as psychological numbers and oftentimes a gravitational pull here into where those are at. So looking at the markets here, a couple things. And a couple things on this, the stock market sell-off and things like that. It's just like when you get silver down $1.50 and everyone panics. Those are really the days where I come in personally and I look at it as time to add incrementally, places to deploy cash. I made a laundry list of stocks that I would like to add to my personal portfolio here yesterday and really just measured and mapped in what I would allocate to. So looking at a few things here, the other things that I want to identify here is that when you look at the panic in the stock market, it will pressure the current administration. He's not paying attention to it right now, President Donald Trump. All right. And what it will do is you will see his team start to push for different agendas to turn things around here, because the reality is they have too much to risk if the market keeps going down. So what they're going to help do is they're going to try and push a tax bill that will help soften the economic blow because of his tariffs, and they want to get that passed before July. So that's why I think that we start to get a turning point in the economy and a turning point in the stock market. So he's going to try and get that bill signed as fast as possible in order to keep control of the House in 2026 near the midterm elections here. So you're going to see that turmoil in the market here and the recession risks really pressure the team to kind of act fast to pass the bill and provide an economic boost. So that's a bit in the politics. It's just when you see the market slide so much and you see the memes coming around that are attacking the politicians and people saying, hey, I told you so, shouldn't have voted for this guy, blah, blah, blah. You know, it's just the way people think. That's when you get the turning point with the administration, and you also get the turning point in the markets, you know. So there are other things you can do with these markets when you do get these kind of sell-offs. You can look at selling call options. You can look at buying put options here. You could look at protective strategies. You could use these types of rallies to take down some of your positions or redeploy capital into other investment classes. Remember, there's 27 major commodities. Some of the commodities here have been doing quite well. We discussed wheat, had a great day yesterday. Had a little bit of a pullback from when we got in and then took back off to the upside. Same thing with the corn market. Looks great to the upside, pushing up as well. Crude oil futures trapped in a range right now, $60 to $80 probably is the bigger term picture here, but we're starting to move back up here, and I think that futures could push back up slightly above that $71. A lot of people took shorts on natural gas. They covered those shorts on Friday. They redeployed the shorts here yesterday with that spinning top pattern here and that technical top that it looks like on that natural gas market. So those are not trade recommendations. They're just observations, again, that I'm making over here and I'm deploying and implementing and then sending out to you guys over here. So you guys have any questions, give me a call, 312-858-7303. Remember, futures and option trading, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading.